Hi, good morning. It's Mary Ellen McGonigal. You're here with the MEM Edge show, and this is the show where we point you towards stocks that are poised to outperform the markets, and not just individual stocks. We are going to be doing quite a bit of work reviewing individual sector groups to get you a feel for where the strength is in the broader markets. And of course, from my work, you want to be able to identify where that strength is so that from there you can drill down and uncover stocks within those areas of strength. And it's all with an eye toward helping you uncover stocks that are poised to outperform the markets. We're looking for what are called momentum stocks. So let's go ahead and I'll give you a review of what we are going to be looking at today. The first is, and I'm going to be doing this each and every week, uncovering some of the important attributes of momentum stocks. These stocks do have characteristics unique to them, and each week my goal is to pull the curtain back and uncover at least one or two of the many characteristics to get you tuned into how these momentum stocks trade and what you can be on the lookout for so that you can uncover them. And again, yes, so ways to help you uncover these momentum stocks that are moving faster and poised to continue to do so. We're going to take a look where the strength is in the markets now. We had an interesting week last week. It was, of course, a holiday shortened week. But for those of you that were out of town or not in front of your screens, there was actually quite a bit of action and rotation that took place. So we're going to go ahead and take a look at some of that activity. And then I always want to remind you not to stay at the party too long. And by that, I mean, be sure to have an exit plan. These momentum stocks go up faster than the markets, which of course is good if you own them. However, they do have a tendency, if the markets deteriorate or the group or individual stock comes under distribution, there is a tendency for these stocks to go down faster. So you do want to, of course, have an exit plan in place, whether it's a stop loss or a way to monitor your stocks so that you can retain your profits. So let's go ahead and get started. I'm talking here about some of the ways that you can uncover these momentum stocks. And of course, one of the first ways is keep an eye out on what I'm saying here is investors' interest has picked up sharply. And my work, of course, when I say investors, it's going to be institutional activity. These are the guys that are going to really print and make your charts and move the stocks. 80% of the volume on a daily basis is institutional money. And really just paying attention to volume is going to be a very quite simple. We'll look at a way through stock charts today that you can keep an eye on stocks that are up on volume. That really can be as simple as that. And then from there, of course, you want to be able to monitor whether a stock is in a group that the markets are favoring. And that's really another critical component when you are scrolling and screening the markets. You want to make sure that the stock is in a group that is in favor right now. And we'll drill into that. In this, I'm talking about no barriers to hold the stock back. And that's where your technical analysis is really going to come into play here. You want to make sure that your stock is above key simple moving averages, ideally stocks hitting a new high. Those are the names that, again, are not going to have anything to hold them back. There's not going to be overhead supply, people waiting to sell. So that is what I mean by no barriers. And then, of course, mentioning here having an alert to make sure if your uptrend has shifted. You want to make sure that you exit your stock in a timely manner. So I always like to begin by taking a look from the top down, looking at the broader, bigger picture. Where are the markets and where is the strength in the markets? Now, last week I mentioned to you that it, of course, was holiday shortened, but there were quite a lot in the way of signals that were given. And one of them was the Russell 2000 small cap index. This index was it rallied 3% last week, and if you compare that, for instance, to the S&P, which was up a bit over 1%, it was not up quite as much, but very clearly the Russell 2000 put its hat in the ring, if you will, and showed itself as a leading index, which it had been, but more recently we did see a bit of a pullback. So we're looking at a daily price chart of the Russell 2000, and we can see this pullback here. And in the Russell, it really took place just a little bit over a week that we did see a sell-off, a lot of trade war related angst in the markets, and of course with the rest of the markets the Russell did fall back. But keying you in on some of these simple moving averages, I have a 10-day is the green line, the red is a 50-day simple moving average, and pointing out here that the index did in fact very orderly fashion pull right back to that 50-day simple moving average. And that's unlike the S&P 500, for instance, which had at least two dips below that 50. It was a little more onerous, but this Russell held in really quite well, and it had a very significant rally last week, and putting this index back into leadership category. And the stochastics is another indicator that I do like to show, where the stochastics are coming back up through this net neutral after being oversold. So that's one area. And then the NASDAQ also had a significant rally last week. It was up 2.4%. We're looking at a weekly price chart here of the NASDAQ. And this 10 line on the weekly is your 50-day simple moving average, and it did undercut it just a bit. Of course, tech got hit harder than a lot of other stocks with the trade war, tariffs, and the potential tech stocks that could be impacted harder because they do quite a bit of trade with China, and also there were some outstanding potential trading barriers that were going to be put into place. So tech did get hit, but we can see that it recovered very nicely. And so the NASDAQ and small cap stocks currently are leading the broader markets. So let's go ahead and drill down a bit further from here. What we are looking at here is from stockcharts.com. There is an ability to get a snapshot of the sectors, and this is where I like to go to see where strength is drilling down even further. So we're looking at a 1 week snapshot. So this is at the close on Friday, and it's informing you how the sectors performed. Over here you can see the bars. So this is in order of performance for the week. And hopefully you can see quite clearly that healthcare really came on strong. It was up 3% as an overall group. And I will tell you, drilling down even further, what you can do is simply click on to the name of that sector. It gets you down into the subgroupings and then into the stocks. A super powerful screen. But within healthcare last week, it in fact was the biotech stocks that really came to life. These biotech stocks rallied 6%. One of the major bellwether biotech stocks, Biogen, had good news on their phase 2 clinical trial, and Biogen actually rallied over 16% for the week. But what that did in turn was awakened a number of other biotech stocks. So what I'm pointing out to you here is how you can access that type of information using this snapshot screen. here. So this is, again, a weekly view, but let's go ahead and what I did want to do from here, I mentioned to you the fact that we did see a lot in the way of healthcare. So immediately we see biotechs are doing well. They had a significant rally last week, 6%. Small caps were up. So in your mind, you might think that small cap biotech stocks could be a potential way for you to get in front of this new rotation. And what I wanted to do is spend just about 2 minutes pointing out to you, for those of you not familiar with biotech stocks, many of them do not have earnings. They are still in their discovery phases. There are over 500 biotech stocks that are actively traded in the broader markets. So a lot of times these smaller biotech stocks, they are not going to have a lot in the way of coverage. They're certainly not going to have a lot in the way of earnings. So I was going to spend just a very brief moment. This was a stock that hit the screens on Friday as being up on volume. It's ZFGN. ZafGen is the name of the company. And this is a super tiny 250 million biotech company, and they do quite a bit of work in the diabetic space. But what I wanted to point out to you is that the company did have a lot of news. What I'm keying in on here is this is a daily price chart. So over the last 2 weeks, this stock really picked up as far as momentum. And the reason can be attributed to any number of news. It was added to the Russell 3000. They did have positive phase 3 results on their drug. And they also posted a secondary offering. And this is because normally that is not going to move a stock higher. But in this case, it did, simply because this company was running out of capital. They needed the capital. And then also an analyst, Wall Street analyst firm Roth, initiated coverage on July 2nd last week and said to overweight the stock. Now, I will tell you, this is news that's out there, but it took me a long time to uncover all of this news with this small cap, because the coverage is not really there. What one can do without having access to institutional type news information, really keying in on the volume. We talked about this in the beginning. So very simply keying in, screening for stocks that are up on volume. Again, knowing that these smaller biotechs are very volatile, but this is one way that you could, without and then from there, you could, of course, go and try and uncover this news, but really quite simply keying in on stocks that are up on volume, because hopefully you can see just how significant a pickup this is in the volume. But the stock actually is up from this period. It's up actually 42% over the last 2 weeks. But really, again, keying in on the volume will do it for you to get you in front of these stocks. Now, more to my liking, this is another biotech stock. It's Seattle Genetics, SGEN. This stock is quite a bit larger, and it does have a published drug. It has a lot in the way of pipelines. For my work, this would be a stock that would be much more appealing because it does have numbers on the table. It has wide coverage, easily accessible to get news and information that might drive the stock higher. That prior screen, those news items are typical of momentum stocks and some of the catalysts that can propel these stocks higher. But with Seattle Genetics, a biotech stock, you can see that it's poised to break out of a 20-month base. That's a very long base. And it's also looking attractive technically, as the RSI and the MACD is positive. So, and it does trade quite a bit more actively. So pointing out to you other ways that you can key in on these biotech stocks that are potentially coming into favor, seemingly. So here we are looking at that very same sector view, but this is on a daily. This is Friday, the snapshot at the close of Friday, those very same sectors. And on Friday, we had significant and actually quite positive release of employment numbers, the economic data. We had non-farm payrolls that were very, very solid. We had an increase in year-over-year wage growth. So very constructive economic report on Friday. So when you see that, quite simply, you can look at this type of a snapshot to see what sectors are in fact doing well and maybe could be in response to that strong economic report. So we can see on Friday the healthcare, and this is going to be, again, that biotech, but take a look at technology and consumer cyclicals. On Friday, they traded in the top 3 as far as improvement. And I'm pointing that out because technology and consumer cyclicals have both been leading the markets. These are 2 areas that recovered faster from the correction that occurred in late January or early February. There were a number of areas within technology and consumer cyclicals that were able to withstand a lot of the market pressures. And the reason that I wanted to point that out to you as far as these sectors coming on strong, given strong economic numbers, is a number of these tech and cyclicals sold off over the last 2 weeks because of the trade war fears and with the broader markets. And what I'm pointing out to you here is an ETF. This is IGV. It's a large cap software. So computer softwares was a very, very strong area within technology. So taking a look at this ETF is a way that I can show you what happened to these super strong software stocks. They did get hit. They got hit harder than a lot of other technology stocks. In this case, undercutting the 50-day simple moving average. But more recently, and this is last week, we did see a little bit of it the Friday before last week, but these stocks, in particular software, are coming back into favor. So what's happening is we have this sell-off, undercuts the 50-day. We saw this with a lot of individual stocks within software, and we'll drill down to some examples. But what you can see here is this turnaround where it is reversing this downtrend, and it's showing quite a bit in the way of strength. So what I did want to do quite quickly is go ahead over to stockcharts.com, and we can take a look at quite quickly some of these software stocks that are actually coming back into favor after having sold off. So this is an example. This is SHOP, Shopify. We're looking at a daily price chart, and you can see that with the broader markets, this had been a very, very strong stock, sold off, undercut that 50-day similar to that ETF, but now we're seeing the stock regain its upside momentum. It's breaking up above these key simple moving averages. You have your RSI and your MACD also trending positively. So I did want to just take a few minutes here and look, because given where we are in the markets, this is a super unique and very ideal opportunity to get into some of these stocks that you may have missed, some of these big, faster moving momentum software stocks that had this sell-off in line with the US-China trade war. And those that are able to come back, break back above key moving averages, you are able to enter these stocks on their pullback. So here is, let's take a look at a medical software stock. This has another one that was a big winner. It's called Teladoc, TDOC. We're looking at a daily. Now, in this case, the stock did not sell off as much as the group. And the reason I'm pointing this out is because this is signaling that within the medical software space, this is your leadership stock. It really did not sell off as much, and now it is hitting a new high. So this is the kind of stock within the groups that have sold off. If they are currently hitting a new high, they are going to be your leadership. One other name in the software space, this is Salesforce. Again, sold off briefly, but not as much as the broader markets, now hitting a new high. So these are your stronger names that you want to be aware of. So quite simply, screening for stocks hitting new highs within software will put you in front of these stocks. And let's take a look at examples of stocks that are not, they're not leadership. They are still looking a little weak. This is Paycom software. It's in the same industry group as Salesforce CRM, but take a look at the difference where it very much did break below key moving averages, huge volume, much bigger volume. Now, in its attempt to recover and reverse, come out of that pullback, it's struggling. It is not able to break back above that 50-day simple moving average. That simple moving average is in a downtrend, making it heavier. So this would not be a candidate. And then going back to that medical software, we looked at TDOC, did not pull back, is breaking out to new highs. Take a look at a name that is weaker, that would not be of interest. This is also in the medical software space, same industry group, but take a look at how it is now just coming up upon its 200-day simple moving average. This is a daily price chart, and this very well could easily act as resistance, so not as strong. Hopefully you can see the difference between the two. Again, this is a winning stock within database software. This is DATA, a daily price chart, sold off to that 50-day and is very much close to hitting a new high. So that would be a lot more interesting to me than another stock that is in this very same group, Splunk, SPLK, sold off with the software stocks, but it's really truly struggling as far as regaining and having any side of upside momentum. So I did want to spend a few minutes there. Let's go ahead, and this is another area that I like to do each week, where it's another snapshot, another way for you to capitalize and capture where the strength is in the markets. And this is called the candle glance. It's accessible very easily from the front page of stockcharts.com. And it is populated primarily with very well-known indices. And what I've done is populated it in addition with others that I like to keep an eye on. So what we are looking at here are 12 charts. The Russell is in here, the NASDAQ, and the Dow, but also industry groupings. So if you're not familiar, XLV is healthcare. And healthcare, I will tell you, I do this each week. It was languishing in the lower. One other thing, this is sorted by RSI. So that's what you can do, is choose an indicator once you've populated these charts. And then for my work, RSI is a relative strength indicator. It's a momentum indicator. Then I sort it by descending. So this first is going to have the most relative strength. It is over the last 2 months, but there is a heavier weighting on the more recent activity. So we can see that healthcare really shot up to the forefront here. Consumer staples is one that we've been following. This is another one that was back languishing here, and then over the last couple of weeks with the sell-off, it marched up more to the forefront. So you can get quite a bit of information from this snapshot really quite quickly as far as identifying where the strength is now. You want to key in on that type of rotation. You can see the semiconductors are suffering. They're down here, again, very much China trade war related. But I also want to point out the industrials. We can see that they are having for them, a significant move today. They're up 1%. So let's go ahead and take a look at that, and financials as well. These are two areas that have been languishing. So we'll take a look here. This is a daily price chart of the industrial sector. And this is, I do have a weekly newsletter that is delivered on Sundays as well as Wednesday. And this is part of the report that went out last night, pointing out that the industrial stocks were deeply oversold. And here I am using stochastics. For those of you not familiar, this is another type of momentum indicator. It is more leading than the RSI, but take a look at the line. Once it gets below 20, it indicates that the sector or stock that you're viewing is deeply oversold. And you want to keep an eye on that, because ideally you want to be able to capture these bounces at some point in time. When a stock or an index is oversold, there is an anticipation and an expectation that it will in fact bounce at some point. And today we are getting that. Last night when this went out, it had not quite turned up. So this is really quite encouraging, because once it crosses this dashed line, there is that's when it turns positive. Of course, you do want, if you're looking at stocks, the price to be above simple moving averages. But what this is indicating is that, in fact, on Friday, when the tariffs actually took hold, industrial stocks were flat or up on the day. So interesting to me, because that is telling you that a lot of the bad news may very well be built in. So this could be an area at some point to go ahead and take a look. We are starting to run a little bit out of time. I wanted to go ahead back to the slideshow, and this is taking a look at Friday's action. This is a daily price chart of consumer discretionary, similar to the software. So you're in a position, for those of you that missed this significant move here, you now have an opportunity to enter these super strong consumer cyclical stocks at a cheaper price. And from there, we can take a look at individual stocks. Okay, this is that same industrial chart that we were looking at. So let's go ahead back. There's one other, I have time for one other area and item that I did want to go ahead and share with you with using stockcharts.com. So what I wanted to point out to you is, again, from that initial interface page, this on the right side here is something that is populated automatically. It's updated throughout the day. So you're looking at, it has the NASDAQ or the Dow, the S&P, the NYSE, and quite simply, it's giving you the top 10. So if we look at, for instance, the S&P 500, the top 10 movers as of right now by percent, that's how it's ranked. You can see Caterpillar, Deere, a lot of these industrial stocks that we were viewing. So from here, what you can do is go to that candle glance view. Here is a view of those 10 that are moving today. I'm going to go ahead and populate it with that RSI and then sort it in descending. So out of those names that are moving today, here's your sort. And again, a lot of wonderful information right here at your fingertips, because not only can you see that Baker Hughes is of those top 10 in the S&P movers today, is listed first, but also really quickly you can see where these stocks are relative to these simple moving averages. So quite simply, from my work, these the only one that might be of interest could be COF. It's broken up above both of these simple moving averages. RCL is getting there, but this heavy downtrend is really going to keep me away. And so we are running out of time, but let's just go ahead and pull up COF, and we can, of course, pull up a larger chart. And this is yet another way to get in front of stocks that are potentially turning. They certainly are moving. Again, it's from that initial page interface. I do need to leave it here. I do have a workshop coming up this Saturday. It's a 2-hour workshop. Would love to tell you more about it. If you visit my website, meminvestmentresearch.com, go ahead and contact me and I'll share all the information with you. And good luck trading this week.
you.